Hey there, I'm Steve Palmer with Dunbar Real Estate. Did you know that if you purchased your home or refinanced your home in 2019 to 2022, back when interest rates were 2 to 4%, and you used a FHA loan or a USDA loan or a VA loan, that those loans are 100% assumable per the federal government? This is federal law. So, what does this mean to you? That means that a buyer can take over your payments and the lower interest rate. There's no down payment. There's no appraisals. It's very clean. It's a very very easy transaction to make. It's just a matter of filling out a few some paperwork with the current loan holder, and they can take over your payments. And then as far as the difference between the remaining balance of the loan and the purchase price, they can either pay that in cash, or they can take out a second mortgage. And why this is very appealing to buyers is because this saves them a huge amount in their monthly payment. There are so many buyers out there that got pushed out of the market with these higher interest rates at 6 and 7% that they would love to buy a home, but they simply just can't afford it. Well, this now gives them an option, and they are willing to pay a premium. I've seen them pay up to $10,000 more than fair market value for a home that they're able to assume the loan, because all they're really concerned with is their monthly payment. And if you do the math, if they're saving $300 a month, uh, when you compare your interest rate that you got back in 2019 of 2.5–3% versus today's interest rates of 6.5 to 7%, I mean, some of them that's a $300 a difference just in a month. And then if you factor that in over a year, $300 a month saving, that's $3,600 a year. You factor that over 25, 30 years, you're talking about $90,000 to $100,000. So they're more than willing to pay you an extra $10,000, just to be able to get that lower interest rate. But the key to doing this is position your home on the marketplace, uh, such that that to attract these buyers. Most sellers don't understand or even know that assumable loans, how they work, or that they're even a thing. And the truth is, most agents don't. I mean, they may have heard of it, but they have no clue how to structure them. They have no clue how to market the home to attract these buyers, and the sellers are leaving tens of thousands of dollars on the table because the homes are sitting on the market longer now because of interest rates. They're having to take price reductions because of interest rates. But if your home is marketed properly by an agent that understands how assumable loans work, and they actually show the buyers that, hey, if you purchase this home and you do assume their loan, your monthly payment is only going to be this. It's going to be much lower than what they are at today's interest rates. Buyers are more than willing. That you're opening up your home to a whole pool of buyers out there that otherwise wouldn't be in the marketplace. So this is very important, and this does. I mean, this I encourage you to do your own research on assumable loans. It is 100% a real thing. This isn't kind of a scam. I know it may sound too good to be true or some kind of sales gimmick. It's absolutely not. This is very real. I've done several of these deals recently. I mean, with interest rates being what they are, assumable loans, they used to be a thing, 15, 20 years ago. And then when interest rates dropped, there's really no point in doing them. Well, now that they're going back up, they've become a thing again, but nobody knows how to do them. But I do. I understand how they work. I understand how to market homes to attract those buyers. And if you're thinking about selling, I can definitely do that for you. So it's definitely worth a conversation. So please give me a call. There's a link in the description of this video. You can go through the process there. You can call me directly. All of my contact information is listed in the description of this video. And let's just have a conversation. Tell me when you purchased your home, what kind of loan that you used, what your current payoff is, what your interest rate was, and then I can tell you, look, I feel like this is what we can do. Either it works or it doesn't work. But if you have if you did purchase a home or refinance a home in 2019 to 2022, and your interest rates are between 2 and 4%, and you used a government-backed loan such as a VA or FHA or USDA, that's 100% assumable. So let's have that conversation. It may be directly result in extra tens of thousands of dollars in your pocket. So thanks so much for watching this video. Please like and subscribe, and feel free to give me a call anytime. Thanks again. Bye-bye.